Effiong Ekop is in the studio. I'm taking that mood from Mr. Kwaga to Effiong. Effiong, the market bounced back.
Very well, very well. You know what happened yesterday when you said I should take a position?
You did want to take a position.
No. The market today has bounced back, and you see prices have stabilized. Market index recording 0.42%, in green. And that is also saying that the stability is what we've been, waiting for. But the downside of it is that within those 3 days that markets went down in red, the market has lost a little above 4 trillion naira.
Wow.
Before then, we were having a market cap of 92 trillion. And so today, we just come down to about 88 trillion. Those 3 consecutive days of trading in red, the percentages, they were
yes,
deep. And so they dragged down the markets, in prices and value. Then in year-to-date calculation, we also reduced about 4% from the 40 that we had. Now we are at about 36% in year-to-date growth of the market. That's the impact or implication of the market staying very high up and then suddenly it comes down. So there must be that sharp level of reduction. And then we can see in just 3 days of market trading in red. So having done this or having seen this situation, what is the way forward?
Yes.
You would like to ask me. I see that we are still going to be trading in green.
Who will sustain this?
Yes, a number of days coming. I said that the buying attitude is very, very serious in the market. So there was just, those 3 days were just to come and do a kind of rebalancing. And I think we would have been able to do that. So it will kick up again. Even today, you've seen some of those top gainers. They are taking very high percentages. Better Glass, 10%. UPDC, 10%. FTN Cocoa, 10%.
Wow.
Veritas Capital,
wow,
10%.
Wow.
So it is a preparation. That is the force of which the demand, for securities in the market has shown. Tolu, I said that the market is dynamic and it has shown itself as a center of creation of wealth for Nigerians. And the main attraction now is for our brothers and sisters that are outside of the country. They are relatively in a position to bring the foreign currencies. Once they exchange the currencies, you find out they are in position to buy some of these things that look luxurious to us in a way. But it is good for the market because it makes the markets very, very strong. See, now we don't even need to talk about foreigners that used to come in with their dollars and then, make a jest of us once there's any problem. So we have Nigerians who back us with euros and dollars. That is very good. That's why the market is very, very strong. Then you talk about the institutional investors, the pension fund managers, insurance institutions, they are really, supporting the market. So the market is very strong. That's the way we are going. Again, banking, recapitalization, and insurance, they are the areas that we are also putting, or investors are putting their eyes on, which means money will still go those places. And luckily, we hear some banks are already meeting tentatively what the CBN guidelines have speculated. So what are we saying? If you are ready to create lasting wealth for yourself, your family, the market is the way to look up to.
That's a good one. Yeah. Well, let's leave it at that for today and project and see how our next week will be like that. Have a great one, Effiong, there. Well, let's take you through stocks in Asia, which mostly clung to safe ranges today as traders awaited the speech from Federal Reserve Chair Jerome Powell at the annual Jackson Hole Symposium. It started already and will run this weekend. That could shed light on the direction of monetary policy. But the MSCI's broadest index of Asian Pacific shares outside of Japan gave up early gains and was last down 0.1%, paring its advance to 1.3% so far this month, defying the sleepy mood. China's blue chip CSR 300 index jumped 1.8%, on track for a third consecutive day of gains. China's tech-focused Star 50 index rose almost 8%. The Nikkei 225 veered between gains and losses and was last down 0.1%. S&P 500 futures bobbed between gains and losses and were last down 0.1%. The cash gauge on Wall Street is on a 5-day losing streak, which had left it on track for its biggest one-week decline this month. Crude oil prices rose slightly today as hopes for an imminent peace deal between Russia and Ukraine dimmed, increasing the risk premium demanded by oil sellers and putting prices on track to snap a 2-week losing streak. U.S. West Texas Intermediate crude rose to $63.61 with an uptick of 0.14%. Brent crude futures sells for $67.73 with an upside of 0.09%. Bonny Light sells for $78.62 with a downward review of 2.84%. And for the OPEC basket, dealers offer $68.64 with a downward price review of 1.19%. Well, one foreign story before we go. Japan's core inflation slowed for a second straight month in July, but stayed above the central bank's 2% target, keeping alive market expectations for another interest rate hikes in the coming months. Latest data shows that Consumer Price Index, which excludes fresh foods items, rose 3.1% in July from a year earlier, faster than the median market forecast of 3% gain. Energy prices fell 0.3%, the first year-on-year drop since March last year. But food inflation, excluding volatile fresh food, accelerated to 8.3% in July from 8.2% in June, suggesting that rising living costs continue to pressure households. Economist at Merji Yasuda Research Institute, Kazutaka Media, says inflation is expected to continue easing for the rest of the year due to a moderation in rice price surges and the resumption of energy subsidies. Governor Kwazo Yuda also stressed the need to tread cautiously, on trade as further rate hikes due to an expected economic hit from the United States tariff. Indeed, that's our show for today. Thank you so much. And for the week, thank you so much for being a part of it. On behalf of the entire production crew, I'll see you on Monday. Stay safe, enjoy your weekend. Don't forget to make the cash. I'll see ya.